All right. So here we are in the 630 put, that low of 7.65. The high, 7. So it's less than a half a delta right now, I believe. 627.93 was a half delta. And we're below that half delta, and we're going to see how many highs that we make right here on the open and how they started the high over here. And this is how they didn't capitulate the bid because it's day number 2. So, and they didn't capitulate the bid either here. So on the weekly, if this was on Thursday or Friday, that's really when they capitulate bids. On day 2, they're still within their ranges. But hey, you have all to gain, and you're going to make a series of 44 highs in the first minute print. You're going to make a low. That's a 645 ratio in the weekly and a 4.6. Remember, day 2 of Tuesday. So you start the market, but then you bring that market down based on these series of highs. You're going to bring these down to our wholesale bids for that side of the trade. I will feature that call option on the 600 that we bought yesterday, and some people had the big gains. We got another $10 gap. We will hit the high, and when you have that reversal hit 629.25, and we hit 680 over here, and 675 coming into play. How about that wholesale bid? Remember that these were in the money puts until today. And right now, we're in that 3-minute, 1-minute opening bell, working on a 3-minute, and we're getting that price level down. I'm sorry, if you don't think this is the real deal, then what is? Once again, we're always on that wholesale bid. And we're watching the climactic $600 call that we featured on yesterday's trade to buy at that wholesale bid in the training we did over the weekend. Look at that, baby, pumping that $30.20 on the high, deep in the money, 600 from yesterday coming right up there. There it is, 660 on the low, 55 by 70. I couldn't have asked for it better. This is great wholesale area. Day 2 of a weekly price premium. You will notice that Wednesday, Thursday, and Friday, and on Friday is when you really get those capitulation bids. And we've made 136 highs, and we got a 660 and a 670. Look at that reversal right there. Now, we talked about 3/4 delta at 632 and some change. We're in between 1/2 and 3/4, and we have that first little pullback reversal. We can see that money flow. We can see 2.2 million shares in that 3-minute bell with a 660 cup on that bottom of that weekly. Here we go. Look at here. See, they got 1,000 contracts traded on the open, 483 here on that 630 put up of that 660, and you're 3 minutes into that squaring in. Here it's rolling right now. You can see that volume's pumping like there was no volume. As you got that 2-minute reversal, 3-minute candle, it's there. You're going to have your first bar, 3-minute opening bell. How to get wholesale here, looking at day number 2 of a weekly option expiration and premium. However, when do the bids get marked even down more? Is when they capitulate bids on opening bells. That was not in the bull run today. So if the bull run was really going to capitulate the put side, that's what they would have done. So we made a 660 low, and we're printing off right here, and you would be limiting out at 720 just because you would be taking your profits and limiting out at 720, 725, 730. That's that penny range increment in profits. But you have to know that look at the reversal. So the dollar rule's coming in, and I did it all in a 4-minute price print, and how to limit out the contract once you learn how to own them to start with. So you make that money off of the low, or you have a range from that low to that initial close to the range that they provided. $1.71 is the actual mathematical range. And you can see right here, the volume was just rolling heavy. And on that opening bell, in that 5-minute print, you got 775 contracts traded, 660 marked down, do the math, 13.65. And here we are making another series of higher highs, Let's see if we can get below that 660. That's why you had to sell up there to 725s now, in the 720s. Yes, it is live. Yes, it was a positive debit. Now we're going to look for lower markets. So I'm going to tell you the prices. Start putting bids in at 560 right now. And we'll see, based on the delta range, where 560, that's below the 675 bid, and that would be a wholesale entry. And we're going to watch and pinpoint that low right here, right now. And why, when you get hit, why you have to sell out at the higher prices within the actual opening price print. That's 5 minutes within that $1.71 range. And getting the low range, selling the high, it's coming down. Look at those highs. We're burning 193 highs, and it's all about that opening bell, wonderful gap. As they run that name higher, is how they take the premium out of this side of the market, as they have not broke it, and there it goes. There it goes, 710 by 20s. As soon as you had that reversal off of that 631, you dropped $1, and it all happened in 6 minutes on that opening bell. How to get wholesale. Hey, what's wrong with that bid? Nothing.